Focusing on other stories now, all eyes are now on the RBI. The central bank is set to announce its fifth bi-monthly policy on Wednesday, exactly a month, incidentally, after the government's demonetization decision. And the markets seemed to have factored in a cut. CNBC TV 8's Ritu Singh, who polled Treasury Heads and economists from across India's top banks, joins in with what can be expected from Governor Patel. So, Ritu, is a rate cut almost a certainty now, at least according to the people you're speaking with?
Yes, it seems like it's almost a given that Urjit Patel will cut repo rates. By how much is the big question. But the CNBC TV 18 poll we conducted says a majority of the respondents, which is economists and bankers alike, are expecting at least a 25 basis point rate cut in this particular policy. Given that MSS hike has happened where the ceiling for MSS bonds has been hiked from 30,000 to 6 lakh crores, we also asked our respondents if they're expecting a partial rollback of the 100% CRR that was imposed on deposits post-demonetization. And 55% of our respondents, and this is important, they expect at least a partial rollback to happen even before the 9th of December, which is when RBI is set to review that hike. As far as the CRR or cash reserve ratio action is concerned, they're not really expecting any change in that 4% limit, which is likely to be maintained. As far as the total rate cuts is concerned, till the end of March from the 7th of December, 70%, which is a big chunk, are really expecting a 50 basis point rate cut, whether it is one cut in this December policy or two rate cuts spread over the next few months. The most important factor actually to watch out for would be the growth forecast. Remember, so far RBI has maintained its GVA forecast for this fiscal at 7.6%, but obviously that is, of course, likely to get impacted by demonetization, and 75% of our respondents believe it will be lowered to between 7 to 7.5% range, which is not a drastic change from 7.6%, but irrespective, there should be a lower bias. Inflation now, CPI inflation for October, if you remember, came at 4.20%, and economists are factoring in a much lower inflation given what has happened post the ban of 500 and 1,000 rupee notes. So 75% of our respondents say inflation forecast may remain unchanged at 5% for March 2017, but there will be a downward bias as far as the CPI forecast is concerned. And lastly, the liquidity stance of the RBI will remain in surplus mode, according to 95% of our respondents, so no change there. But aside from any rate cut action, really will be, the governor's comments on demonetization that will be closely watched, especially given the fact that RBI so far remain mum on the subject.
Everybody is expecting that there will be a rate cut, so people would be surprised if it is not there. How much? Let us see. But anything between 25 to 50 basis point is a possibility.
It's actually not as simple a decision as all of that for the RBI, because there are other things happening in the world. There is an imminent interest rate hike in the United States. There is political uncertainty in Europe. So there are all those factors that may weigh on the rupee. So it's a balancing act that the RBI will have to perform. But I have to believe that there is more likely to be surplus cash in the banking system, and therefore whether or not the RBI cuts rates, I think lending rates and deposit rates are probably headed south.